Welcome to the Cash Flow Project Podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cash Flow Project Podcast. I'm your host, Steve Fieros of Tri-City Equity Group. I'm excited today. We've got a return guest on the show. We've got Paul Moore, and Paul's done many amazing things over his career. So I'm excited to dive back into, of course, where he's been since the last time we spoke. But his journey of success is really anything but ordinary. After starting his career at Ford Motor Company years ago, he co-founded a staffing firm and was a two-time finalist for the Michigan Entrepreneur of the Year. He sold that company to a publicly traded firm. So obviously early on had some great success. And over the years, Paul's founded multiple investment and development companies, appeared on HGTV, successfully completed over 100 commercial and residential real estate investments and exits. He currently manages 8 commercial real estate funds, and they're committed to helping investors achieve consistent above market returns with diversification across multiple asset types, geographies, operators, and strategies. And we're going to talk a little bit about that on the show. Wellings Capital, they also raise money and awareness to combat human trafficking and rescue victims. So all of this aligns with business success with a higher purpose. And we're definitely going to have some conversation about that. But Paul is also a 3 times author. So we'll talk about that. We definitely want to make sure you guys are getting your hands on some of his material that he's put out, even partnering with Pockets, talking about self-storage and a number of different investment opportunities. He's got some new books on the horizon as well. So we're excited to dive into the conversation. Paul, welcome back. I'm glad to have you back on this show.
Steve, what an honor to be here. Thank you.
Yeah, no, and we were having some great conversation off camera here. So we're definitely going to dive into, it's going to be a pretty wide ranging one today, guys. We've got a lot of events that have been happening in the world as of recent. We're recording this mid-September. And definitely want to dive into, of course, Paul's history. So for those of you guys that did not catch the first episode, we'll kind of give in a little bit of his backstory, and then also to what he's doing today and making an impact far beyond just, hey, we can make great returns through our portfolio. We can help investors do all of that, but we want to have a purpose in doing that too. And so that's something I do want to highlight, and we want to talk on today, Paul. But for those of our listeners that maybe didn't catch the first episode or they're not familiar with you, just fill us in a little bit of your backstory and kind of how you got started into this whole real estate game.
Yeah, you bet. I'll just go back a little bit further. So I got an engineering degree in the 80s, and that was my first big mistake. Then I got an MBA. That wasn't so bad, and went to Ford and had my own company, sold it. And I woke up on Saturday, October 7th or 8th. Of 1997, the day after putting $1.5 million plus even more in my bank. And I didn't feel any different, Steve. You know, I didn't feel like I had made it. I actually felt some imposter syndrome. Mm-hmm. I actually kind of wondered, what am I going to do now, et cetera, et cetera. So I had always heard that having millions of dollars would not make you happy. And I wasn't any happier. Our marriage was still struggling, and I was still struggling to be a father and all that stuff. But anyway, about 2 or 3 years later, jumped into real estate. I did a commercial deal first, which was really kind of odd as a passive investor. And then I ended up being in residential for about 11 years, flipping houses, waterfront lots. I built 7 houses, and I learned this really important fact for your listeners. You really shouldn't build a house if you don't know how to tighten your own doorknob. I'm just saying. So found that out. But anyway, yeah, I got into commercial real estate in 2011, ended up writing a book that was humbly titled The Perfect Investment about multifamily. And since then, we broadened into 6 or 7 different asset classes. We're never the operator. We always invest with the best operators we can find to put into our different private equity funds.
I think that's a key thing for sure there too. It's just kind of being specialized. For those of our listeners, I talk to a lot of investors, do a ton of networking through conferences, meetups, calls, and everybody, it's a multifamily, commercial. I want to be a syndicator. I want to be an operator. And I can tell you just up front, not everybody should be an operator. It's a special call. And again, just like everybody shouldn't be an engineer or a doctor. And so, especially when you start to take on other people's capital, like in my mind, in my mind, they're entrusting you because with their effectively their life energy, their time and energy that they've used to actually develop capital and park it with you. And so just something to keep in mind for those of the listeners that may be kind of tuning in and wanting to be operators. You can do it. It's definitely, but it is a skill and you have to develop it. You got to have the right temperament. You got to build the right team. And so Paul and you guys are focusing on the capital side and partnering with the best operators out in the space and across a bunch of different asset types. I really appreciate that about you guys.
Yeah.
We talk a lot about diversity of portfolio and geographic diversity. Can you just touch on that real quick? We don't have to spend a lot of time there, but the importance of, well, no, we only do one thing or we only invest in one asset class.
So Warren Buffett and Charlie Munger say basically diversification, and I study them a lot. I can quote them on different topics, I hope. But Buffett said diversification is for people who really don't know what they're doing. And then I looked at Buffett's portfolio and I said, hold on, he's Fortune 7 company. He's got 28 people on staff, by the way, in his company office at Berkshire Hathaway. And he's diversified across 107 different companies, 107 basically different business types across massive, more or less 50 states, geographically diversified. So it didn't really make sense to me. And I don't think we have time, Steve, into going into what Buffett meant. But I can tell you that I think it does provide a safety net when, like, when self-storage was booming, it was carrying a lot of our investments, but then self-storage got overbuilt. And it actually, the interest rates stopped people from moving and they weren't moving as much. Therefore, they weren't renting as much storage. And so there were a lot of markets where self-storage rental increases reversed. Well, during that time, mobile home parks and other workforce housing was booming. And so that was great. And it made sense to be in different places in the capital stack during those years as well. And so we like to diversify across geographies, operators, asset types, properties, and of course, the different places in the capital stack. So we might do a little debt, common equity, preferred equity, and even JV equity, which again, probably don't have time to get into all those details.
Yeah, no, and I would highly encourage for those of you just tuning in and you're not familiar with those terms, almost kind of put together, okay, he talked about that. What does that mean? And just take a little bit of time just to educate yourself. You'll be a better investor for it. But it's very, very valuable, especially as you kind of scale up into more advanced asset classes, different asset classes. So just take a little bit of time, better yourself. You can pick up one of his books or check out some of our prior episodes to do that. But yeah, no, very, 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 very pertinent information. And so you guys are now current state of the market. We are still a higher interest rate environment that's obviously affected operations. I always love talking to people who've been through different market cycles because we can easily get into pigeonholing ourselves thinking, oh, well, hey, you know what? We're in a low rate environment. That's just always how it's going to always be. And the market's on fire and man, I'm a genius because all of my investments have panned out.
Right.
We're in a different place right now. Things are tight. Where do you see us kind of heading in the near future?
Yeah, well, interestingly, when I wrote the book, The Perfect Investment in 2016 about multifamily, I failed to take into account the fact that there was one huge flaw in my thesis, and that is you could seriously overpay for anything, any asset, especially in a boom mentality. And of course, there was a huge boom, which turned into a bubble, which eventually burst in multifamily. That people were trading assets just with the hope that somebody else would pay them more later. And so that's not investing. According to Buffett and Munger, that's speculating. And investing is when your principal could generally be safe and you've got a chance to make a return. Speculating is when your principal has no basis in income, no basis in reality, and you've got a chance to make a return. And so there was so much speculation going on, people saying, look, I believe rents in Tucson will keep going up at 9% a year. I believe interest rates will stay down at the 5,000-year low, and therefore I'm willing to get floating rate debt. I'm willing to over leverage because the more leverage I take, the more profit I'll make when things go well. But things don't always go well. And as Howard Marks says, trees just really don't grow to the sky. And so we saw this, and you made a comment about different market cycles. If you could see me on the camera right now, you know that I'm old. And so at 61, I've seen a lot of different market cycles. Most importantly, the 2008 one, which we might want to talk about more, Steve. But I realized, hey, this is going to go bad. This has to go south at some point. And I thought 2017 was it. I was convinced. I wrote a blog post or two or three or four for Bigger Pockets saying, time out, the perfect investment's not perfect, get out. And I was wrong, because December 23rd of 2017, Steve, you remember President Trump passed this law that actually gave this massive acceleration boost to depreciation. And the commercial real estate and multifamily market zoomed into high gear again. And of course, we all know that in March 2022, the interest rate hike, the first of 11 in 16 months, did not cause the problem. It just exposed the problem, which was speculation.
Mm-hmm. Yep. Yeah. We have there's a kind of a joke, obviously, me being based here in Hawaii, there is 8 islands, and a lot of times they call Las Vegas the ninth island, and people from Hawaii love to visit the ninth island. And so it's a
Right.
place for it's a place for gamblers and lottery tickets and all that kind of good stuff. And that's not a place for real estate investing. If you guys are wanting to keep any of your money and grow it, I wouldn't suggest buying lottery tickets.
Yeah, agreed. I love that.
Now, I would say, what similarities do you see to where we are, let's say, to 2008? Are you tracking some similarities there? Or do you see some opportunities, or what are we looking at?
Well, this might be controversial, but I would encourage people to go look it up. Warren Buffett and Charlie Munger said that in 60 years or so of investing together, they never had one single conversation about the economy with regard to making an investment or a divestment. And you might think that's ridiculous, that's a lie, but it makes sense. They said they're looking for durable asset types, durable products. That means products that go really, really well in any economy. Second, they were looking for fantastic management teams. Management teams, the jockey and the horse thing. So a great horse, a great jockey. And then third, they were looking to buy with significant intrinsic value. Buffett said, price is what you pay, value is what you get. And so if they could do those three things, they'll do that in any economy. They did take advantage of certain faux pas that people made, like in 1963 and 64, there was the American Express salad oil scandal. You can go look that up. Buffett knew that American Express was a solid, I don't know how old, but let's say 100-year-old company that was only going to be temporarily harmed by this terrible salad oil scandal. So he bought all he could, and he made a lot of money from American Express. And so there's that. But overall, I think we should be looking for assets that we can hold for a long time and in any market. Now, where are we at right now? Peter Lynch said those who live by a crystal ball are destined to eat glass, which is similar to what Buffett was saying. I really don't know where things are going to go from here. As we're recording this, we could be moving into a recession. There's a small chance we've almost hit bottom. Multifamily has incredible runway. The supply and the demand are so out of whack in favor of commercial real estate owners, multifamily owners, especially workforce housing owners. I would hate to be a renter in the next decade. And it's going to go really, really well. But again, people could visit that ninth island and ruin it by speculating on something that could be a great investment.
Yeah, no, for sure. And basically, he's kind of talking, hey, look, I trade more on fundamentals, and you're not going to go wrong investing with and on solid companies with solid operators, solid fundamentals, just very basics. And for those who are listeners, you might say, well, that's kind of boring.
Oh,
It's like, okay. Well, you can take boring all the way to the wealthiest and most successful investor of all time. And so if that's what boring gets you, then we'll take it.
Yeah.
But I know you've been working on being a boring investor. Can you tell me a little bit about that?
Yeah, Paul Samuelson was the first U.S. economist to win the Nobel Peace Prize. And he said investing should be boring. He said investing should be like watching paint dry or watching grass grow. He said, if you want excitement, take $800 and go to Las Vegas. And I think that's absolutely true. I'm working on a book called The Boring Investor. And boring investors, they attain true wealth, which is having assets that produce cash flow. It's sort of like another Warren Buffett quote. He said, if you don't learn to make money while you sleep, which is boring, you're sleeping, right? If you don't learn to make money while you sleep, you'll have to work until you die. And so boring investors, they attain true wealth, they attain true freedom, freedom from trading hours for dollars, freedom for worrying all the time about their speculations. They avoid hidden costs like health problems and all the stuff that can go with worrying constantly about trading this for that and the other, speculating. Boring investors, sometimes they lose money, but they use those losses as lessons in their quest to make a fortune. They realize they might be wrong. They invest in boring assets like self-storage and mobile home parks. Sam Zell was the most successful real estate investor, perhaps in the world, certainly in America. And he invested in mobile home parks and RV parks when I won't even say people looked down their nose at those. They never even thought of them as an investment. But he made a fortune. He had 158,000 mobile home park pads when he died, I think. Boring investors know where to invest in the gold rush. And everybody knows the story. Where do you invest in a gold rush? Well, the most exciting place, of course, you go pan for gold. No, you sell picks and shovels to the would-be miners. And then later you vacation on those same mountains where those would-be miners bled and died. Oh, did I say that? Anyway, that's some of the tenets of boring investing. My favorite, though, is actually boring investors. They invest in the eternal realm where there's no apparent ROI. And that can look like investing in your marriage, investing in your kids, saying no to that extra trip so you can spend more time with your family or doing things to serve your community. There's no apparent ROI on those things except, oh, someday, depending on a lot of other factors here, you might really, really be glad that you did, and you'll have an eternal ROI.
Yeah, no, absolutely. Absolutely. I know we were having some good conversation off camera too. There's a lot of turmoil that's happening in the globe right now, especially at home in our own country. I know we've got international listeners. You're talking a lot about true wealth being financial wealth, but we both know true wealth goes beyond that. It's especially too, if you're not worried about the gambling component, if you're not worried about speculation, guess what? You got a little bit more peace at home that
Right.
spills over to having time to spend with the family or maybe some altruistic efforts. And then we can focus more on what kind of impact can we have, right?
Right.
And we're talking recently here after recent passing, Charlie Kirk, hey, whatever you thought of him, politically divisive or whatever, the man made an impact. And so he's across every news channel, all that kind of, and everything along those lines. But really talking about leaving a legacy, leaving an impact. And that really is something that we can work towards through all of these financial tools. Paul and I are having a conversation here about different asset classes and investment types. But hey, guess what? Like, wealth is not just the dollars in the bank. Wealth, and what can we do with those dollars? What can we do with those resources? What can we do to make a bigger impact that goes beyond just what we see here, right? And there's only so many cars you guys can buy, only so many houses that we can personally live in or experience and whatnot. And so if you got input there, I'd be glad to hear it from somebody with some sage wisdom there too.
Yeah, Charlie Kirk could have, I don't have definite data on this, but I believe he could have been a billionaire. He could have done anything he wanted, but he chose to sacrifice his comfort his convenience. He chose to speak up for the truth, what he believed was the truth. And he was also willing to say he didn't agree with people on his own team, including the president. He was willing to say, hey, time out. I don't think you're right. And he just was fearless. A friend of mine, a close friend of mine, who's actually a business partner at my company, was one of his mentors, Charlie's mentors. And he said he was the same at home, the same at a restaurant. He was the same guy you saw on stage. And he was really, really genuine. And he was genuinely fearless. And I think it's motivated millions of others, at least in the direct wake of his death 6 days ago. I think it's motivated millions of others of us to adopt the same attitude.
Yeah, absolutely. Absolutely. And like I said, doesn't matter if you believe what he believed, you can take that encouragement in your own life to say, okay, well, where can I step out? Okay, if you don't believe in the causes that he believed in, okay, that's your choice.
Right.
But what kind of impact are you making
Right.
in your own life, in your own community, to the world at large? And so we need to all take that away. There's lessons to be learned from that to go live a fearless life, right? And to go make a greater impact. I know you guys have been working, Paul. I know you've personally been working on some passion projects and making an impact in the world. But tell us a little bit about that and maybe how some of our listeners that are in alignment with you and how we can support that as well.
Yeah, one of the greatest people, and I would even argue maybe the greatest person of the last 1,000 years of Earth history is somebody you probably haven't heard of. Steve, you might have, but a lot of listeners might not have heard of George Washington. No, I'm just kidding. A lot of listeners might not have heard of William Wilberforce.
Mhm.
William Wilberforce his biography is packed with accomplishments that he achieved. Just 100 people, 100 great people could hardly ever have imagined what he accomplished, but he did it all. Like he did all this himself. But one of the most notable things he did, and I think the one that impacted the world the most, was he got slavery outlawed, the slave trade outlawed in the middle of his career. And then 3 days before he died, they outlawed all slavery in the United Kingdom. And I believe that was in 1833. And then it spilled over to the US Civil War about 20 or 30 years later, I should say. But he started out very wealthy. He had I don't think it was a castle, but he had a huge mansion. He was a member of all these clubs. He was the youngest guy ever elected, at least up to that time, into parliament. He was 20 years old or 21 and like a few days, and he got elected. He had all the privilege, and he traded all that for this ROI that was unseen. Well, that's a great story, but it's got some tragedy laced in, and that is this. Here we are, 200 years later, and there's more enslaved people than any time in Earth history, at about 50 million people, they estimate. Steve, since you and I started talking, hundreds and hundreds and hundreds of people were trapped or sold into slavery around the world. And here's what's shocking. If you took the record profits of Nike, ExxonMobil, and Walmart, not the average, the record profits of Nike, ExxonMobil, and Walmart, added those together and tripled that number, that's the approximate profitability of human trafficking every year. It's cool. It's really stunning and it's horrifying. So we, Wellings Capital, said, hey, we want to do something about this. We can't stop it, but we can stop it for one person and maybe even thousands of people. We partnered with an organization called AIM. The website is aimfree.org. And they can free children in Belize and Cambodia from trafficking for just $1,000 per child. And so we're trying to get the message out of freedom that they provide. And you can go to aimfree.org to learn more. It costs a lot more to house them, give them food, shelter, training, counseling, safety. And so we need a lot more money than just the 1,000 to rescue them. But just got word that they rescued 42 more children and put, I think it was 9 bad guys behind bars the same day. So very wonderful cause that I recommend to people, and I'm looking for people to help me on our Giving Tuesday campaign in November. Steve, if anybody from your audience would be interested, we're trying to raise money. We're getting close to $1 million now in 4 years. So
it's amazing. That's amazing. Yeah. And guys, this is, again, some of you may be listening in and be like, okay, well, hey, Paul, hey, Steve, I'm not there yet. I'm just trying to start out. I've got my kids that I'm trying to take care of and trying to build up some additional income so I can do more. Well, I would encourage you, start small, start with a little. And this comes back to a stewardship principle. Wherever you are now, guess what? You add $1 million a year or $500,000 or whatever in income, guess what? You're going to be that same person. You're just going to have more resources available to you. And so that's something that's tugging on your heartstrings. If you've got kids, if that's something that you just can't help to stand to see, and I'm thankful that there's been some light shine the last several years to highlight the atrocities that are still happening out there. And it's incredible. Just some different movies that came out, Sound of Freedom. I think all of the spotlight on the border, all of the immigration component, well, there really highlights too. There's a lot of kids in there too, guys, that are coming across. I grew up in South Texas and I'm horrified. I would read articles where they would find 18-wheeler truck fulls of people in the Texas summer heat. If you guys have never been to Texas, don't go there in the summertime. But they're smuggling people in the back of an 18-wheeler. Well, guess what? Guys, it gets to 100 plus degrees in Texas during the summertime. Those trucks are not refrigerated. They're not gonna. They're smuggling people, and guess what? They don't make it. And so we need to do whatever we can to put an end to that. And these people are trying to seek out something better, and they don't even know. That could be the next Charlie Kirk. That could be the next Buffett, or somebody who can make such a great impact on this world that's being smuggled somewhere and living a horrible life and having a horrible experience here. So yeah, I would highly encourage you guys to check out Paul and their efforts and to do something about it.
yeah, right.
Yeah.
Thank you for allowing me to share that.
No, absolutely. And this is all something we should be striving towards. You guys, to have a bigger and greater impact, again, that is Paul's passion play. But again, there's things that are happening in your local community that you can make a difference as well. And so, I believe God has put us individually where we are for a reason. And so you're in the community for a reason. If you look all around, there's always opportunities to serve the local community and to make a difference there. And you can do that with more and more resources. So, but again, start small. It doesn't have to be anything. It doesn't have to be anything crazy.
Yeah, my son was telling me last night that he dreams of doing great things, and he's doing really, really great things. I'd love to brag on him more, but he said what bothered him is he found out that the local domestic violence shelter, which houses victims, not necessarily of trafficking, but similar, it was covered in mold on one or two sides, the north-facing side. And so he went and he's like, yeah, I want to do great things. I don't want to go pressure wash a house, but he did. And he got such joy out of it because he realized he was making it more welcoming to these really, really hurting women and children who were coming there.
Yeah. Yeah. And this is definitely one of those areas. My years of investing as well, you come across as, hey, we're doing property walkthroughs, or I have an inspection business. We do commercial residential inspections. I walk countless properties. Wholesaling, I've walked countless distressed properties, distressed situations, or you'll walk through a multifamily complex doing due diligence. The conditions that people will live in to avoid, it's horrible. I'm like, oh my goodness, because they're afraid that if they report, hey, my ceiling's leaking and it's grown mold all in there, and about water damage, they don't want to tell the landlord for fear of raising their rent $100 a month or whatever. And so, of course, that falls on us to be better operators, to be a better owners. If you're listening to this, I'm sure you're not a slumlord, but also too, to make those lines of communication open for your residents, but then also to step out and turn some of these properties around, go make a difference in your community as well, provide some resources, whatever that may look like for you, and make a difference in your community.
Right.
So,
yeah.
Well, Paul, this is kind of the point in our show where we transition to just something we call our fire round, just something a little bit lighter to kind of wrap up on a little bit of a high note. Is that something you're up for?
Let's do it.
All right. First question: what's your best book recommendation other than your own? I know you've got multiple, and honestly, it doesn't have to be business. It doesn't have to be real estate. It can be, but it doesn't have to be. What's your favorite book recommendation to somebody who's asking for one?
I had a podcast called How to Lose Money for years, and a lot of the mistakes we saw, including my own, were chasing shiny objects.
Mm,
And I learned when the book came out in 2014, I believe it was, from Gary Keller and Jay Papasan, called The One Thing. I learned
mhm.
the incredible importance of focus. In fact, Warren Buffett and Bill Gates, the very night they met for the first time, they both separately said that the key to success was single-minded focus. So The One Thing.
Yeah, no, that's a great book. And if you guys have not checked that out, definitely check it out. They're super experienced investors, very high level entrepreneurs. And again, they did not get there focusing on a million different things. And I get it. It's so easy to do that. But man, you really pay people. What I've learned a long time ago, there is an exchange that happens in the marketplace for value, right? We provide value. And so there's an exchange happens whenever we bring value to the marketplace that somebody is willing to compensate us for that. People pay for excellence. People do not pay for mediocrity. So if
Yeah.
you're excellent at something and you can be solely minded on whatever it is that you're working on, again, you can have such a great impact in whatever space that you're working in.
Yeah.
So yeah, no, that's a great book recommendation. All right, next question. What is your superpower?
That's a tough question. I think it's visionary, like
Hmm.
getting an idea and then crystallizing it. And as strong as I am in that, I'm very weak in the follow through. And that's why I recommend
Mm,
everybody check out the book Traction, which you didn't
yeah.
ask me about. But Traction tells us that we need a visionary and then somebody to go out and make it happen. And it's usually two separate people. And it's always been that way for
No, it's funny that you say that. The trip that I was on here recently, we were doing our annual traction meeting because we use COS for multiple businesses actually. And I'm the same as you. I'm much more of a visionary, and I'm very weak in actually implementing, all of the different things that need to happen to create once you create a vision, it's just painting a picture. But
right.
guess what? You need all the tools in order to make that vision come to reality. And so,
Yes.
yeah, no, that's really good. All right. Next question. What advice, if you had a time machine, you can go back and go visit your 20-year-old self, what would you tell him?
Well, I feel like I'm being redundant now and repeating myself. That was a joke. I would tell them to stay super, super, super focused. Again, Gary Keller in that great book said you to say yes to your one thing, you've got to say no to 1,000
Yes.
distractions. And I was so distracted. I lost millions of dollars collectively by being distracted. And then more specifically, I would say, okay, focus. And secondly, I would say focus on commercial real estate. I think there's more wealth building potential there than in most places.
Yeah, no, I agree there. And honestly, it comes down to an efficiency standpoint. It's just, okay, well, how much effort is it going to take you to buy 50 single family houses? I don't even want it. That just melts my mind to even want to deal with 50 single families versus, hey, you know what? I might have one complex that has 50 doors. So much easier to manage. It's a different animal to get a hold of, but my goodness, like it
Yeah,
just,
right.
so no, very good. Very good. And
Yeah.
then last question for the busy working professional, somebody who's trying to work towards financial freedom, what advice would you have for them?
Yeah, this is a little tough one, but Charlie Munger said, and he was talking about stocks,
Hmm.
but he said most people shouldn't assume they have a special skill in picking stocks. They don't they don't design their own egg beaters or build their own lawnmower engines, do they? And I think it's similar with real estate. I think that honestly, we looked at 745 operators and deals last year and invested in 5. This year's worse. Our company's looked at 900 already by September, and we've only invested in 2. Hopefully, we'll invest in 5 or 6 by the end of the year. We're looking at closely. But the point is, and this is really important, Steve, all of them looked good at first. And to the casual observer or somebody who gets that email or goes to visit that website, almost every deal looks really good. You have to have the tools and the training and the mindset and even spend the money to do the deep dive due diligence with a really strong obsession with saying no as often as you can. And that takes a lot of work. And so I would really recommend that people go to some of these review groups like the Private Investor Club or Passive Pockets or 506 Group, or read Brian Burke's great book, The Hands-Off Investor, and then really, really consider outsourcing these choices to professionals who do deep dive due diligence.
Yeah. No, that's actually really good advice. You want to rely on people who have excellence in what they're doing. And you have to sort through, just like you're talking about, you got to sift through quite a bit in order to find the best of the best, especially when you're entrusted with other people's capital. And so,
Right.
yeah, no, that's actually really, really good high level advice that has come from, I can guarantee that that advice has come from failure and speed bumps and all of that stuff, because you learn more. I always feel you always learn more from the failures than you do from the wins.
Oh,
There's so much we can.
absolutely.
I can't tell you how many times I personally learned that. And so, but that's okay. That means you're trying. So
Right.
don't be afraid to try. All right. Awesome. Well, Paul, how, if our audience wants to reach out to you, if they want to get in touch with you, both either from the investing side, through the trafficking side, or they just want to learn more about you, what are the best resources for them to do that?
Yeah, they can go to my website, which is Wellings Capital. That's WELLINGS, wellingscapital.com. And if they want a free ebook on self-storage or mobile home park investing, RV parks, and other things, they can go to wellingscapital.com/resources.
Awesome. Awesome. Well, Paul, it's been a pleasure having you back on the show. I really have greatly enjoyed our conversation. Always good to catch up and kind of see what you guys are working on. But no, I appreciate you coming on. I know it's a lot of value for our listeners. And we look forward to catching up with you in the future and see how those next books, when the next books come out.
All right.
I'd love to have you back on.
Yeah, it was great to be here. Thank you so much.
Appreciate you. Thank you so much, Paul. Have a great one. Aloha.
Thank you.
All right. What an absolutely incredible conversation with Paul Moore. He's so accomplished. He has so many books that he's put out. He's obviously working on a couple more. He's got a lot going on in terms of prior history and then what their group is working on as well in terms of funding new deals across multiple markets, multiple asset classes. But the greater takeaway, of course, is what do you do once you actually do become successful? What kind of impact can you have so far beyond what your portfolio says? At the end of the day, the financial wealth is one facet of wealth, but we want to be able to leave a legacy. What are you leaving for your kids? I've got kids, and you may as well if you're listening into this. And if not, maybe you've got kids one day, or you hope to have them. But what kind of legacy can we leave for them? What can we do that goes beyond what we can do for ourselves in the here and now? And so, wonderful conversation with Paul. I look forward to having him back on in the future as well, just to kind of get his take on the pulse of the market and what kind of impact that they're having in addition to financial, but through combating human trafficking or whatever local impact that they're working on as well. But guys, if you're interested in investing or with us or learning more about what we've done, you can go to tricityequity.com to learn more. If you want to connect with local like-minded investors, we have a meetup every month. What I've found is a lot of people don't have community. They don't have any type of local network that will help to want to see them succeed. Your network is absolutely your net worth. For a lot of you listening in, this is going to be something new for you. Stepping out in real estate investing is not going to be what your family has done. It's not going to be what your friends are doing, your coworkers, all of that. And you're going to have a lot of naysayers that hear what you're trying to do, right? So you want to surround yourself with people who are for you, who want to see you win, who are there to encourage you as well, and have been in the trenches. And networking and coming out to connecting there locally, wherever you're at, is the place to do it. And so I highly encourage you guys, check out ours, of course, if you're local, but if wherever you are, go and attend one, network. And then if there's not one, start one. It's not that difficult. That could be hugely impactful for you in your investing career. And guys, if you're finding value in the podcast, please like, subscribe, leave a 5-star review, depending on what platform that you're listening in on. That helps to encourage us to continue to do these and also to get more and more guests on the show. So we appreciate you guys for tuning in. Go out, take some action, guys, and we will see you on the next episode. Aloha.